Awesome. Let's go ahead and get started. So, hi everyone. My name is Kurt Barnes. I'm a strategic account director here at Balance. Really excited to share with you today our webinar on how to win business buyers with a pay by invoice or net terms program. This webinar is being recorded, so it will be emailed to all of you or anyone who is registered afterwards. But again, really appreciate you spending some time to either watch this live or watch the recording with us, and look forward to going through the content. Quick agenda. We're going to go through really four key areas. We do want to introduce what do we mean by pay by invoice. And then as we go and explore pay by invoice and offering net terms to your customers, we'll talk about the challenges and common pitfalls that you'll see. And then we'll finally end with the build versus buy and key takeaways from thinking about a pay by invoice type program. But with that, let's start talking about like why pay by invoice, what exactly is it, etc. So we're starting to see in the market the growth of digital trade, especially for legacy brick and mortar companies. We're starting to see a focus on omni-channel, and then we're also starting to see a key focus from the digital first companies to go and grow into digital B2B trade. It's the B2Cs and the traditional either online digital focused ones or the brick and mortar. With that focus to B2B, we're seeing them try to target a much larger market opportunity than B2C traditionally brings. And we know B2B is a much larger opportunity than B2C. But with that scale does come its unique challenges and preferences. One thing to keep in mind through everything we'll talk about today, people are still the ones behind the scenes making the purchases, right? We're not having machines or business entities clicking the buttons just yet. But there are definitely processes that are built into the B2B world that don't exist in B2C. So it creates a conundrum here, right? You have buyers who are now used to their own individual buying preferences, and those individual buying preferences are starting to blur into the way businesses traditionally make their purchases, which makes it a perfect opportunity for something like offering a pay by invoice program. Now, what we've seen from the B2C world is that I want to make it really easy for my customers to buy from me, right? Amazon changed the world with their one click to buy option. And we're starting to see the rise of things like buy now, pay later, or BNPL. We're seeing that with players like Affirm and Klarna and Afterpay. And now even credit cards. I believe every credit card I have in my wallet has in some way created their own version of buy now, pay later. But with B2B, purchasing for a long time has been dominated by the use of trade credit or buying on account or issuing a purchase order and then receiving an invoice. In one way or another, B2B buyers expect a deferred payment option. Their purchasing decisions and their internal purchasing workflows are defined by having the ability to defer that payment. Looking at some of the stats here, Alliance found that 95% of buyers, B2B buyers, prefer to pay after being issued an invoice with a due date, right? They don't want to pay right there on the spot. Hakodu found that 83% of the B2B buyers are abandoning carts when payment terms aren't available, and that 81% of buyers would open a trade account with their main suppliers if they were offered, right? So businesses are asking, they're begging for the ability to make a deferred payment and pay either pay by invoice, pay with net terms, pay on a trade account. So if you're trying to grow your B2B business online, deferring payments or offering deferring payments isn't a nice to have offer. It's absolutely critical to drive your digital sales, especially if you have a high growth focus. So keeping your customers, keeping your buyers in mind, here are a variety of reasons why buyers, again, need that deferred payment. Again, a lot of it comes down to legacy processes. Your buyers are used to having deferred payments and paying off their bills on a defined cycle. This could be out of a managed process, or it could be out of some financial management need, such as carefully managing their cash flow. Cash flow is the lifeblood of any business, and businesses live and breathe due to good cash flow management. And so with the complexities with business accounting as well, companies may need deferred payments or may need invoices, right, to properly allocate funds or spending to the right departments, to the right budgets, etc. So again, it's absolutely critical for your business buyers to have the ability to have some sort of deferred payment method. But to you as the merchant, it's also equally important, right? The data shows that you're leaving money on the table if you're not meeting your customers' needs. We just saw customers really need this, and customers are able and willing to spend more when they have access to more capital, or in this case, more credit. Having access to credit drives more return purchasing as well, right? Which drives loyalty. And then when done correctly, providing access to credit for businesses in an easy, frictionless, B2C-like experience allows you to better target and provide for those business customers, or if you're growing B2B for the first time, to be able to attract those new business customers. And finally, if you don't offer it, you risk a competitor doing so and taking that market share away from you. So we've talked about what is pay by invoice, what's the why. We know our business customers needs it. So why isn't everyone doing it? It seems really simple to offer net terms, to offer trade credit. Businesses have been offering credit off their own balance sheets for over 100 years. But as we enter this new digital age, or this new omni-channel age for those who have a brick and mortar presence, it's not as straightforward as it may seem. We're not just adding a new payment option on a checkout form. If you're thinking, I want another drop down, I want another radio button on my form, and I'm going to solve this problem, you're missing a lot of the things that go on behind the scenes, right? There's a whole new customer journey that you have to consider. And then again, that administrative back office experience to consider for your own staff, your own team. So let's go through those challenges. To talk about them, what we've done is we've oversimplified the pay by invoice journey into 5 key phases: application, approval, checkout, payment, and then reconciliation. And reconciliation is generally more internal, but it's what we're including as part of the journey. If you look at this, it actually closely represents your standard B2B order to cash process. However, within each one of these phases or these stages, there are a variety of challenges faced by both the merchant or the retailer and their customer, the buyer. Hidden behind the scenes of the pay by invoice journey are the workflows to support the various stages, right? So you need to be able to manage credit risk assessments or underwriting, right, for the initial part of the process. You need to be able to invoice. You need to think about dunning and collections. And then once you've received payment, what about cash application and reconciliation? And then what's new to all this, right, in the digital age is you need to be able to do all of these things at scale and really, really fast. And when we're thinking about a lot of this, we also like to think about the happy path, right? What happens if everything goes well? Challenges are going to come up. We know that, right? So what happens when there is a dispute or return? You've got to think about those as well, right? You need the ability to support challenging times, when things are falling off the rails. How are you going to handle those sorts of challenges, right? For example, if you need to think about having a process to create and manage credit notes, or how are you going to handle invoice adjustments, things like that. And more importantly, if you're coming from a business who's never offered this before, if you're coming from a traditionally B2C business, you typically are going to lack many of these capabilities, right? You may not have a large, robust credit management team. You may have a 1 or 2 person AR team, if you even have AR, right? If everything's cash and carry, right, you may not have AR. And so because of that lack of experience, a lot of times when businesses are starting to create a pay by invoice program for the first time, they don't think about some of these things, and then they're unable to scale, or they're unable to really reap the benefits of offering this type of program to their business buyers. But starting a new program can also be an opportunity, right? So if you're starting from zero, you're not locked into a lot of the old processes. You have the opportunity to build modern, scalable order to cash capabilities that are going to allow you to offer a seamless customer pay by invoice experience and avoid many of the common pitfalls, which we're about to dive into, right? But again, hopefully that's why you're here and listening to this webinar, and hopefully we're able to help. So with that, let's dive a little deeper into some of these common pitfalls stage by stage. So first is the application stage. And this is, in my opinion, one of the most critical, right? If you've ever gone into a old store, right? Go into a hardware store and apply for credit, you're going to see very long paper forms. They're going to be asking for a bunch of business details. They're going to ask for personal information, maybe even a personal guarantee. They're going to look for references. They may even ask for finances or your financial documents. And if you're in a tax exempt type of situation, you may ask for that documentation as well. There are a lot of companies that have tried to replicate their old school traditional business credit process into the digital world, right? So it's, when you think about from the digital experience, it's not a great experience, right? A lot of companies are still forcing their customers to create a trade credit account before they're even allowed to shop online, before I'm even allowed to see potential prices and to see if you are a potential supplier that can help me, right? It's a very annoying process to the customer. It creates a lot of friction. And if I'm a new customer, it may be enough friction for me to, be turned off and walk away, abandon the whole process altogether. So customers are used to filling something out to create a new account, though. I'm not saying no application whatsoever. Just like if I'm a consumer, I want to create a new Amazon or a Walmart account, I still have to fill out a form and give some basic details and create that online account. So when I log in, it says, hey, hi, Kurt. Consider how you can provide that same experience to your B2B customers. How could they create a new account on your platform and potentially start that credit application process with as little friction as possible? You definitely don't want your customers having to fill out multiple applications, right? How do you make this new customer experience as great as possible? And so to think about that, you also got to think about how, when I'm building that experience, what are some of the pitfalls? What are some of those challenges, right? I just hit on having a lengthy or cumbersome application or even multiple applications, right? If it's a frictionful experience, I'm going to abandon that application. But another common pitfall that leads to customers to drop off is buyer mistrust. You've either built, whether directly or indirectly, trust with your customers and potential new customers, right? That's why they're on your site, or that's why they're in your store. If the next step in my customer journey is, hey, by the way, go to this third party to apply for trade credit or business financing, you may turn me off at that point too, right? I don't know who that third party is. I may have never heard of them. I came to you, right, as the business that I trust and want to do business with. And so that's an equally bad experience, right? If you're redirecting them right off of the site when you've spent all this time and effort trying to attract new customers to your site or to your store. So if you are, you also got to think about who you're engaging with, right? If you're engaging with the owner of a company, that's one thing. But many times you're engaged, especially digitally, right, with someone who isn't authorized to create a new credit line with a third party. Many buyers aren't, right? But many buyers are allowed to create trade credit accounts with their suppliers, either new or existing, right? Because there's that trust. I trust that supplier. By reinforcing your brand, by continuing to build trust and relationship, you want to make sure you offer pay by invoice under your own brand, right? And I want to note, like, this is something that we're seeing that's very different on the B2C side, or the buy now, pay later side, right? You're seeing BNPL providers put their brand front and center. You're buying with a firm or with Afterpay. And that works in the B2C side because we can make our own financial decisions for ourselves, right? With B2B, again, your buyer may not have that authority. So if you're going to partner with someone to provide some or all of this pay by invoice experience for your customers, you want to make sure that it's something that's able to be fully white labeled, fully embedded into your experience. And then finally, you have to make this fast, right? If the decision takes too long at the time of checkout, your new customer, the buyer, may abandon the whole process altogether. One tip here, actually not the tip that's mentioned on the screen, but one tip here is to start that process as soon as possible, right? Way before they get to checkout. Best practice is if you can integrate this into part of your standard onboarding process, you're not doing multiple applications, you're potentially even using this to help drive that first sale by that new buyer. However, for the tip that's addressed here, something else to also think about those multiple customer flows, right? If you already have data on your customers, you may be able to bypass the application process altogether. You may be able to do things like pre-approvals and then guide them to the right page at the right time, so they feel like this is a special offer or something that's special to them. Or maybe you're not promoting a pay by invoice to someone is going to get declined, right? So there's a lot of different things you can do, but you can try to streamline the customer journey based off the data you already have and based off information you may capture with some of the things we're talking about behind the scenes. So moving on, that was just the application. I probably spent way too much time there, but again, I think it's one of the most critical areas. But what's next is, okay, I've applied, now a decision needs to be made, right? Are you going to approve them for credit? If so, how much? How long will they have to pay? Are you going to give them 15-day terms, 30-day, 45, 60-day terms? To be able to do this well and protect yourself from the risk or the credit risk that you're going to be giving to your customers, you need to be able to use data, right? Now, if you're solely relying on basic credit bureau data, you're going to see low approval rates. However, the credit bureaus, Dun & Bradstreet, this is the traditional path for most businesses who've offered this for, again, decades, and even most third-party providers. If you have a low approval rate, however, right, you're leaving money on the table. Obviously, you want to be responsible and not issue credit to non-credit-worthy buyers, but you don't want to turn away someone simply because 1 or 2 data points on there, or maybe there's a single yellow flag. You'll be able to responsibly offer a higher approval rates, right, if you're able to incorporate numerous data sources into your decision-making process. Now, this could be from credit card transaction history, right? There's services out there that provide information like that, or even from their own bank account, right? If you could create your own quick P&L and based off the health of their bank account and transactions that they've made, available cash, things like that, you may be more willing to issue them credit. So you want to be able to pull in information from a bunch of different sources. Again, the goal is to be able to say yes, as much as possible responsibly, even if you're just giving a very small credit limit to get started, right? You may only want to give them $500, and then once they repay, increase the limit over time. You also want to make sure your buyers can easily use pay by invoice, right? So this means limiting the amount of onboarding needed. Maybe you just need to provide them with an activation email, right? There are some disclosures that need to be shared. It also means making sure that they're aware that they have a credit limit, right? Think about businesses. You may not have a single individual. You may have 5 or 6 different buyers buying from that same single credit limit that your business is offering another business. So you want to make sure that they are aware that they have a credit limit in the first place, right? Things you can do there is display the credit limit during the shopping experience and definitely on the checkout form. Engage them with emails to make sure they're aware too, right? Previously in a former role of mine, we used emails showing their available credit at the end of the quarter as a way to try to spark a last minute bump in quarterly sales. So we've been talking about, applying and being approved and onboarded. The next step we want to talk about is checkout, right? Let's actually talk about using it. Obviously, if your customers can't use pay by invoice easily, you're not going to see any impact or the benefits that having a program like this can provide you. Again, here are a few common pitfalls that we see during the checkout stage, right? Like what happens if they don't have enough credit to cover the full order? What happens if they can't follow their own processes, like adding a PO number that's going to appear on the invoice? And then who should get the invoice, right? Like, again, they need to be able to repay it. And we'll talk about payment in just a minute. But these are complex B2B problems that you may not have seen before if you're coming from the B2C world, or if you've never offered a program like this in the past. These are all things that come into the design of the program and the overall end-to-end customer experience, right? You want to give your buyers the ability to split their payment across multiple payment methods, for example, right? Let's say you do have that new small business, not a lot of data on them, so you've only approved them for $500, and their order is $750, right? Give them the ability to use that $500 of trade credit, as well as then putting the rest on credit card or ACH. And then we can actually use that data once they've repaid, or you can use that data, right? Once they've repaid on that invoice to potentially increase that credit limit, maybe this time to $1,000, which may cover their next order, right? So it gives your customers the ability to build their own credit, gives you the ability not to lose that sale. And, again, it's going to help drive the adoption and utilization of a pay by invoice program. Thinking about the buyer workflows, right? So you need to be able to let the buyer add the purchase order to the transaction, make sure it appears on the invoice. It's going to make their reconciliation much easier and make them more willing to use pay by invoice with you, right, online. And then also as part of the service, let your buyers tell you who should be able to use it, and where the invoices should go, right? Maybe they have an accounts payable, like AP at, acmecorp.com. They want all the invoices to go there. Maybe they want a copy to the actual buyer as well. But the person making the buying decision, the person clicking the checkout button, is likely not the one who's actually paying the invoices. So you want to think about things like that, design that into the customer experience, and make sure that utilizing this payment method is a very, very simple thing for them to do. So the next step, next stage is the payment, right? Obviously, you want to get paid for the invoice, right? And there's really two key challenges that are faced here. First is the buyer's unclear on the payment process, right? So if this is the first time they've used pay by invoice, well, how do I pay it, right? So again, we want to make sure the right person is getting the invoice, and we want to make it really easy for them to pay and give them lots of payment options, right? You may want to give them the ability to pay for that invoice via ACH or via wire, bank transfer. You may want to also be able to give them the ability to pay that invoice off with a credit card, right? But you don't want to take on the additional credit card fee. So maybe there's a surcharge or an additional fee that your buyer pays to have that capability. All of that should be something that's really, really simple, really presented right up front and built into the overall process. You also may have customers who don't really know what's going on, right? Like many invoices are happening. I need to know what have I paid, what haven't I paid, what's still outstanding. So giving your customers the ability to see their transaction history, but also have it tied to, well, here's the invoice that was tied to this transaction. Maybe a single transaction got shipped out in 3 or 4 different shipments. You may have 3 or 4 different invoices. Or the reverse, you could have like a trade credit type program where all purchases that are made during a specific billing period have a single invoice, right? You'll need that to relate back to the individual transactions and the individual shipments as well. So there's a lot of complexity when it comes to what is in essence that that customer facing, that external reconciliation process that needs to happen. And so you want to be able to provide your customers with the ability to easily navigate and answer the questions they may have around what are their outstanding balances, what are the invoices that need to be paid. There's also the ability to offer things like auto pay and backup payment methods, right? So again, make it really, really simple for them. Maybe they set up in the very beginning, I save a credit card, I save a bank account, and I then can also have a single checkmark that says automatically pay these on the due date, right? Just make their lives simpler. And then finally, reconciliation, right? Again, maybe not so much customer facing, but very, very important to you as the business that's offering a pay by invoice program. Key things here like cash application, right? An invoice gets paid, but they have 10 open invoices. Which invoice did they mean to pay? So you've got to think about things like that, because the last thing you want is some sort of assumption or mistake on your side on the reconciliation side, causing a customer to lose access to their credit limit simply because you applied payment to the wrong invoice. Again, a lot of challenges come in here because it is usually a very manual process as well, right? The cash application, figuring things out, that can be difficult, right? So building in ways for the customer to easily buy and tie in which invoice am I meaning to pay off right now, that's super important, right? Also having automated matching, making that a little bit easier for you to do, where you can rely on the computer and special logic and AI to help drive the cash application process versus trying to, again, manually figure it out yourself. Same thing about not having an exact match. Maybe my total outstanding is $1,000, right? And I receive a check for $752. How do I apply that? What can I do? Maybe it's 2 of the 3 invoices that are outstanding equals $752. Right? Again, getting back to the customer experience, we want to make sure that, yes, they are paying you, and then we're doing the right things with those monies so they don't see any interruption in their credit limit or have to do a bunch of back and forth with you to make sure that cash is being applied the right way. One last thing here, one general, I guess, all-encompassing pitfall is treating pay by invoice purely as an additional payment method. This is another thing I'm super, super passionate about because I've seen it time and time again where I either just add a new radio button and expect people to use it. But if they don't really know what it is, they probably won't use it, right? The other thing to think about is, and we've been talking about it this whole time, there's a lot of complexity that goes into it. So it's not just as simple as putting a button there. You've got to think about all of these second, third, fourth level deep pitfalls that will make the overall experience great. So again, just coming back to the two that I think are maybe most important that again address the whole program, is to market the initiative, right? So obviously, again, we want to try to drive applications as early as possible into the process. Best practice is to have it fully embedded into your existing onboarding path when they're just creating a general account, not a trade account, just an account to be able to purchase with you online. But you may have a customer journey or a path where they need to go apply. You may be able to do both, right? And then you're looking at customers who don't get automatically and immediately improved, but may get improved if they do something like link their bank account. You may want to engage with those customers in a special way, do a marketing initiative that says, you may be pre-qualified or you may be eligible for this, go fill out this form, link your bank account, and then we can, potentially offer you trade credit, right? So by marketing this initiative, treating it like a financial services product, not just as a payment method, will help drive the utilization, and it's going to help drive the overall success of this program. Now, how do you know if it's a success if you're not measuring, right? We inspect what we expect, right? And so we want to track the adoption. We want to see what's happening, what's the change in our customers' behavior. Now we've made pay by invoice an available payment option, right? You may also, using the measurements there, make decisions, right? Are we targeting the right customers? Are we giving enough credit in the first place? Are we increasing credit over time? Are our buyers actually buying more because they now have access to additional credit? Or are they just moving from credit card to pay by invoice and the AOV is staying the same, right? So there's a lot of different questions that you should be asking yourself as part of this, because this is a product into itself. You want to measure it, you want to promote it, and you want to continuously work to improve the overall efficacy of this program for your business. Again, thinking about measurement, right? And I wanted to hit on this as well. One thing that we see a lot is I give an initial credit limit, and unless that customer comes and asks for an increase, that credit limit stays the same. And so by measuring and looking at this and thinking about, okay, customers are starting to buy more. This is an example of a specific customer, right, using pay by invoice over time, but having automatic increases, one granted to them, but also marketed to them. And you can see here over time that spend continues to increase, right? It's not because they're moving funds from another payment method. This was purely shown to be because that increase was available. They were able to spend more. They were able to successfully pay that invoice, leading to yet another increase, leading to yet another increase. And that revenue spend with that merchant continued to increase, right? The AOV, the order value, continued to climb. And so you would never know if this is happening unless you're doing things like measurement. And then we've talked a lot about the impact to the buyer, right? Ways pay by invoice can help them. Obviously, we think it can help grow your business as well, increasing AOVs, things like that. But I also think it's really important to think about the challenges that your business may also be facing and how pay by invoice could help solve those challenges, right? If you're in a business that is highly impacted by a cash flow disruption, you could use pay by invoice, again, with a partner to potentially finance the gap, right? And a simple example is using a pay by invoice program. You're giving your customer 30 days to pay, but you may be able to get your cash up front and again, take off the risk by financing that gap. Maybe finance isn't or the cash flow isn't the most critical concern, but you are concerned about the risk of bad debt, right? So there's different ways we can use a pay by invoice program as well. You could get financing on the invoice due date. So you may still have a 30-day cash flow gap, but you're guaranteed that payment on 30 days, whether or not the customer actually pays their invoice, right? So it's another way to think about having a insurance against credit risk. And then finally, you could have high overhead costs, specifically coming from the accounts receivable side of things, right? If you're able to transfer that credit risk and collection responsibility to a third party, you may be able to reduce those overhead costs. You could also implement things like accounts receivable automation, right? We talked about being able to think about automated cash applications, just ways to take off some of the burden from your existing AR team, or not have to invest in an AR team if you don't have one already. So again, not only is this making it possible for you to effectively serve your buyers, but it could also be a way to help address some of your internal business challenges as well. So now we've talked a lot about the why pay by invoice, what is it, and then what goes into offering a program like this, where are some of the common pitfalls and things you should be considering if you've never done this before. So it also should lead to the question, should I build versus buy, right? If you go build versus buy, no matter what, you should be thinking about some sort of technology, right? In today's day and age, and to be able to offer this at scale with speed, you need some sort of technical infrastructure built into your processes, whether that's built into a platform, built into your ERP. You need some sort of technology somewhere to be able to power a pay by invoice program, right? So with when you're thinking about build versus buy, what sort of things are you looking for, right? You're looking for some way to manage the credit application side of things. You're looking for some way to manage the credit risk assessment. And then also you're looking something to manage the invoicing and the AR reconciliation. You may also, again, talking about some of those challenges that impact the business. You may also be thinking about, the financing side of things. Am I able to increase my cash flow? Am I able to take away that risk of offering a credit type of program? So, what you should be thinking about is, can you support scale? Can you facilitate the work that's usually needed behind the scenes by a credit or AR team? And then what would you need to build? It could be building the technology from scratch. It could be hiring the individuals to run these processes, or it could be partnering with a company like Balance, right? So our Balance's net term solution is specifically designed to power everything we've talked about today. It's headless and fully white labeled, and it's very, very flexible to address many, many different potential concerns, challenges, problems that you as the business may be facing, or that your customers may need to be able to effectively and easily buy from you. And so again, thinking about the whole build versus buy, by working with a partner, obviously you could see a lower development cost. Building any software or hiring new people is always expensive, right? No matter what. So you also may be looking to be able to outsource the credit and AR overhead to that partner, right? You're not having to hire as many people. You're able to offset that risk, right? So by being able to offset that risk, you're able to ensure that your business is protected, but you're still offering all the benefits to your customers. You're also looking for something that's really easy to scale. I would say maybe over half of the customers that Balance support actually started with some sort of in-house built credit program originally, whether they've been doing it for a very, very long time. We've got some customers that we support that have hundreds of physical locations. They've been offering in-house trade credit, again, for many, many decades, but they weren't able to make it scale online. They weren't able to replicate, or they tried to replicate their existing experience and it didn't work online. They realized that they needed a better way of doing things, and they couldn't scale the program that they had to service their online customers. In some cases, they've built it out, but they're only able to support their largest customers, right? Because of maybe they're not willing to take on the risk, or because of the amount of overhead that's required to do things like credit checks, make those decisions, and then manage all of the invoices and whatnot that come back behind the scenes. So again, how easy is it to scale if you try to build in-house or by going with a partner? And then finally, again, things are moving very, very fast in the market. We're seeing the rise of B2B just keep accelerating. We're seeing a lot of copycats and a lot of people trying to play catch up with their competitors. How fast can you get something like this implemented, right? It's not as simple as just offering a radio button on your checkout form. In some cases, if you build in-house, this could take over a year to build. We partnered with a customer who took over a year and they still couldn't get it launched in time. So by partnering with a partner who's focused on offering this via technology solution, you may be able to get at least an MVP of this program up in weeks, and a fully integrated program up in less than a couple of months. So how fast are you able to get this out and available for your customers? So finally, how balance adds value, how we think about this. I mentioned we offer the ability to provide a native and customizable buyer experience. Again, we're an API first solution, so we want to be able to be fully embedded. Oops, excuse me. We want to be able to be fully embedded into your customer experience. We don't want your customers to know who Balance is, right? We're not a firm, we're not Klarna, this isn't B2C. We want your customers to know that they are doing business with you, and that by working or by accepting this credit limit, right, they're still working with the brand and the trust that you have created. Again, you also want something that's very flexible for your customers, right? Not every business is unique, right? There's a lot of similarities, but something that's specific to you may be very different. That's even for your competitor. So you want something that's very, very flexible and able to solve the challenges that you're facing or believe you may face, whether that's your buyer's challenges or your own internal challenges. So you need a very, very flexible, not a one-size-fits-all type of solution, but something that's able to go with the flow and solve the key problems that you have. You also, for Balance, we're very much growth focused, right? We think about how do we say yes as much as possible, albeit responsibly, right? We want to say yes and be able to issue credit to as many different buyers as possible. Why? Because that means they're more likely to buy with you. And you're more than likely able to build a deeper relationship and grow that customer. And so, again, we talked earlier, we're not just using Dun & Bradstreet, but we have a variety of different ways to do underwriting. We can even build custom underwriting models specific to your business that allow us to ensure that we're providing the industry best credit approval rates. We've also had a keen focus on being able to support SMBs. SMBs are 99% of the market, yet they are the hardest ones to underwrite. And traditionally, they're the ones that we say no to most often. And so how do we say yes to as many different businesses as possible, including SMBs, even micro SMBs or sole proprietors? And then also getting back to thinking about that measurement use case, how are you managing this credit, right? We're growth focused. We're not just wanting to see, are you using this limit and are you paying your invoices? But we should be asking ourselves, should we increase this limit? What happens when we increase this limit? So we've developed things like our dynamic credit management, which is designed to allow us to grow credit over time based off of good buying behavior, right? We're not just going to say yes and grow credit to anyone, right? But if they've been successfully paying their bills, but potentially utilizing a split payments type of experience, and they need that credit increase, then we want to make sure that we're able to give it to them without a lot of overhead, without being reactive, right? We want to proactively give it to them. And so we want to, again, just make that really, really easy for you on your behalf. And then finally, thinking about the challenges your business may face, we also provide financing options as part of this. We've got a variety of different options, again, and we can create custom programs. Pretty much every customer has some sort of custom program based off of what their specific needs are, right? Do you want the cash up front? Are you more worried about risk? Is there a balance between risk and cash flow? Do you need a trade credit type of account experience where they get a single invoice a month? Or do you want to be able to send invoices every single day, every single transaction? And so a few things to think about, right, when you're thinking about the why behind this and why you should work with a financing partner or a tech partner altogether. We're able to not only give you the best buying experience for your customers, but also a partner with you in growing your business and providing you with the cash flow or risk insurance that you need. So again, some key takeaways: meet your buyers' expectations. You want to deliver a seamless experience. You want it to be fully embedded. You want them to know that they are engaging with your brand, not necessarily that they're engaging with a provider like Balance behind the scenes. You want to build for scale, utilizing automation and AI to handle things like cash application, reconciliation. You also want to be able to ensure that you can support onboarding new customers as your customer base continues to grow. And then finally, you want to think about this not only as a new payment option, right, but as a whole financial services product altogether. You want to market it. and you want to make sure it's results driven, right? It's providing the impact to your business that you hoped it would by measuring and focusing on those outcomes, marketing to those buyers to drive application, adoption, utilization, and then using those learnings, the analytics from this program to continuously drive growth. So hopefully this was helpful. Again, we've just really skimmed the surface, but really wanted to challenge you and let you think about what goes into a pay by invoice type of program, why you should offer it, what some of those common pitfalls are. Again, we're really excited. If this is something that interests you and that we can help with, please reach out. Start by visiting our website, or feel free to reach out to me. It's kurt@getbalance.com. But with that, again, want to just thank you for your time, either if you're listening live or listening to the recording, and hope that this is something that you're able to consider offering to your customers. Thank you very much. And with that, we will end the webinar. Appreciate it.